Hey, this is Brad Mavis of the Mavis Group. I'm going to go through the partial shutdown provisions of the employee retention tax credit. Now, we do a lot of work in this area. We do a lot of work with businesses that have been deemed essential, but still qualify for the employee retention tax credits based off the partial shutdown. And so I'm going to show you the exact process that we go through with all of our clients, and exactly the information that we gather to demonstrate what a partial shutdown is for our clients. So, we see a lot of people get bad advice that they don't qualify for these because they weren't fully shut down, or they're an essential business like that. But really, when you dive deep into the rules, you see that there's a lot of different qualifiers. There's a lot of different things that make your business eligible for these tax credits. So I'm going to walk through those rules with you and some of the examples we see a lot of. So I'm going to share my screen for a moment here, and this is the document here that we work off of. And so there's really kind of the 5 key areas that we like to hone in on. The first one is on limiting occupancy in your office, retail, and workspaces to maintain social distancing. The second area is requiring services performed on an appointment-only basis, where previously you had walk-in service that was available. Third area is changing the format of the service. So we see a lot of this, a lot of changes of how you're delivering services, how you're interacting with your customers, the contactless pickup and the drop off and the to-go orders, and all of that. A lot of modifications were put in place there. Obviously, anything around the modifications that require employees to wear face coverings and physical barriers, and reconfiguring pedestrian walkways, and reconfigurations of how clients are interacting with your business. And then lastly, really kind of like that internal operations, right? So the changes you had to put in place to comply with different health order mandates, limiting non-essential visitors to your business, implementing modified material handling, limiting production shifts or modifying production shifts, team meetings, putting in place enhanced cleaning mechanisms to comply with CDC guidelines or other state and local guidelines. So, these are kind of the big things that we go through in order to document some of the changes and modifications that you had to make in your business. So specifically what I wanted to go through, I want to share a little bit here about really, this comes straight from the IRS rulebook, right? So this is the IRS rulebook, and that outlines the rules. There's a 100+ page document on this, but it outlines the rules around, well, what is a full or partial suspension of a trade or business? What are the qualifiers? What are the things that us as the IRS are going to be looking at if we ever have any questions? So I'm just going to walk through all these with you, and we take this straight from the IRS rulebook that's posted online. You could Google IRS employee retention tax credits, download this document. It's like they have 3 different documents for the different periods that are in existence, but there's probably close to 200 pages of documentation here. I like reading this stuff. I think it's a lot of fun, actually, but I realize I'm a little different from a lot of folks. So I'm just going to walk through all these rules here and talk about what that what that might look like. So the first thing that we look at is really looking at essential businesses versus non-essential businesses, because a lot of essential businesses, what we've found is they've received recommendations, sometimes faulty recommendations from advisors who haven't necessarily read through the entire rulebook, saying, "Oh, well, you're essential, you don't qualify," and that's understandable, because there is a part of the rules where the IRS says, "Well, if you're essential and all your business operations are allowed to continue, and you had no modifications, in the end, sorry, like, you don't qualify," which is logical, right? I mean, you didn't have any modifications. However, what we find is when we dive into the state rules, the local rules, the county rules, there's a lot of modifications that the business had to put in place, even though they were an essential business. And so the IRS talks about this and says, well, if an essential business, what is a partial suspension of an essential business? And so one of the things they say is that an employer that operates an essential business may be considered to have a partial suspension of operations if more than a nominal portion of its business operations is suspended by a government order. right? So for for the purpose of the employee retention credit, a portion of the business operations will be more than nominal. Basically, if more than 10% of your revenue comes from that section of the business, or more than 10% of the time your employees work are in that end of the business. So there's this 10% threshold here that the IRS speaks to in terms of saying, okay, well, the stuff that you're doing that's been modified, does it account for more than 10% of the hours of your people who are working, or more than 10% of the revenues in your business. So that's number one. The kind of the second key area that we see is, the IRS says, well, if a governmental order requires an employer to close its workplace for some purposes, but the workplace could be open for other limited purposes, is this a partial suspension? The short answer is yes. So the IRS says that the employer's operations would be considered to be partially suspended if the operations that are closed are more than a nominal portion of its business operations. And then they even go on and say, well, even if all of your operations could continue, such as within essential business, but the operations are subject to modification due to governmental orders, then such a modification is considered to be a partial suspension of business operations, right? So they have a very broad basis of what qualifies as a as a partial suspension. So those modifications, the logical next question is, okay, well, what types of modifications is IRS thinking about, right? Because modifications could mean a lot of different things. And so the IRS says, well, here, we'll give you kind of a rule book, some guidance to understand what we're thinking about. And so one of the things they say is the modifications that we're thinking about are those that are required by government order, right? So an order from the governor, an order from the mayor, an order from the health department, that is a condition of reopening a physical space for business or service to the public, right? So a lot of essential businesses that we work with have retail parts of their business, right? They're open to the public. However, when you look at all the rules and regulations that were put in place, there's a bunch of modifications that had to be made to that retail part of the business. So for example, I live in California, work with clients all over the country. But so I live in California, and California basically, put out a notice saying, for all these essential businesses, saying, hey, you're essential. We're going to put you in this category. They actually call it the limited services category. You can continue to be open, but you are required. You are required by this order to follow these rules as a condition of being open to the public, right? So, and we go, there's all sorts of different things that they have to do. And the IRS says that here's an example of the types of things that we're going to be looking at, right? So limiting occupancy to provide for social distancing, requiring services to be performed only on an appointment basis, changing the format of the service, right? That contactless pickup, contactless drop off, enhanced cleaning, whatever it may be, and then requiring employees and customers wear face coverings, and physical barriers, all that sort of stuff. So the IRS goes out and says, even if all operations continue, but you had to modify them, then those modifications are more than nominal, right? It's not just wearing a face mask; it's more than nominal. Then you would qualify as a partially suspended business. And then after all that, the logical question is, okay, so we go through all this and we say, yep, this all makes sense. Well, what do we have to actually have on hand to substantiate it? And this is where we see a lot of folks make mistakes in terms of, the documentation that is needed to be gathered in order to prove this effectively, right? And so the IRS, the great part about the IRS is that because they are a bureaucracy, they give you all the rules, right? They give you all the rules, they give you all the rule books. It's up to you to follow the rules and, as I say, dot the I's, cross the T's, document, what we went through in this process. So some of the things they say, so, well, one, you have to have the government orders, right? So we have to actually reference the government orders, and what we do is we actually pull down all the state orders, any applicable local orders that apply to the business, and to demonstrate these are what the rules were in place. So we actually have to have those on file. The second thing that you need to have is any records that the employer relies on to determine, was this more than nominal, right? So, all the stuff that we went through, we have to prove it. You have to say, hey, listen, this is what we did, right? So we have to, have those, those business records. We have to use, the third thing is any records that would demonstrate a decline in gross receipts, right? So your revenue numbers, your sales figures, whatnot. We have to compile any records of the employees that received the qualified wages and what amounts and when they received them. And so, all of that information as well. So, high level, those are some of the record keeping things that we need to have in place there. However, what we found is that when you put, when you fully document the modifications you had to put in place in your business, and you fully document, and you fully gather all the information that you're required to have on hand, it creates a very compelling narrative of demonstrating exactly how the business was modified, the items and the operations that you had to go through to comply with state and local mandates to reopen the business. And so we put all that in the file. We keep it all in one kind of clean area, so that if there's ever any questions, we have that nice full report that says, well, here's exactly how we came up. Here's exactly how we determined our qualifications with these guidelines. So if you're going through this process, you have a hard time understanding, well, what qualifies, what doesn't, reach out. Give me a shout. Love to help. Love to help walk you through it. Answer any questions you have, and we can talk about what it might look like to work together to get some of these credits for you. Thanks.